Hello, Mark Sturdy here again with a brief summary of the general thrust of our analysis this week of the world's major liquid markets by 7 days ahead. And if we turn to our summary page, you'll see that we remain bears of the yen, bulls of the dollar. We have pulled back from our bearishness in the Eurostoxx 50 temporarily. It's a very uncertain situation as regards all the stocks. We'll come back to that in a minute. But we remain bears of yields in the bonds, primarily in the German Bund and the UK gilt, equally short-term in the US Treasury note. And we've pulled back from oil in all time frames and gold as well. Let's start again, as we usually do, with the dollar-euro, where we remain long-term bears of the dollar, but there's a great deal of uncertainty in the medium term. There has been a short-term strengthening of the dollar over the last 2 months, but the overall situation seems to me to be uncertain. It hasn't broken down the support for a stronger dollar yet. It's got to break down through 114.73, and anyway, beneath that there's good support at 12.75, 12.13. So we suggest standing back from the dollar-euro, but we remain excited by the dollar-yen, and this is worth reminding you why. Big continuation triangle completed here, above the 147 long-term prior high. That suggests some moves up to a minimum of 175. The market, there has been another continuation triangle here. We're in the throes of being infected by this head and shoulders bottom as well. The market looks to have broken above this prior high here. So on the whole, we remain bearish of the yen, bullish of the dollar. Sterling euro is similarly uncertain like the dollar euro. Been in the middle of a trading range, middle of the sideways price action, which may turn out to be a triangle, may not here stand aside. And dollar sterling similarly uncertain. This may turn out to be a bear rising wedge, but on the whole, it's just trending sideways in the medium term against the dollar stand back, unless it were to break 131.44. Turn to stocks. We were excited principally by the bearishness of the Eurostoxx 50 last week when it closed here and beneath this major support. And if it is bounced, no question about it. The price action here, twice it tried to get beneath the major long-term prior high, and it's bounced. And indeed, there's possibility of it working its way higher from this level. Tremendous uncertainty. Stand back, we suggest. S&P 500, well, the trend is as yet unbroken. The major test of the medium-term trend, 64.56, it bounced. It is struggling against this overhead resistance here at 66.39, so it's in a bit of a bind. Again, as I say, tremendous uncertainty. The strongest of the markets is the Nikkei, it strikes me, whereby the market, the long-term continuation quarterly market, is spectacularly shows the break above 39,600, the creation of a continuation triangle at that level that's driven the market up to current levels, the pullback to medium-term support of 52,500, but also the possibilities, it has to be noted, in this sideways price action, this attack on the support from the prior high, the possibility were the market to break above 54,500 of a head and shoulders reversal, driving it further up. So watch that. Bonds, we remain bearish, principally of the German Bund. Let's go to that. It's broken above these prior highs. There has been a pause, but price-wise, we see the attempt to rally back higher prices, lower yields has failed, and looks to me to be a straightforward. With stops above here, it's straightforward, very vulnerable. Similarly, the gilt. There is a price way yield. This is the price action, but note. I'm so sorry. I beg your pardon. Here's the gilt. The major chart is a breakdown from this triangle and a breakdown through this sideways consolidation, or break up in price terms. Note that the rally back in prices failed at the gap. It looks vulnerable, and here in yield terms, the market's pulled back, but it finds support at this diagonal here. US Treasury note is, of course, stuck in the wide trading range, in the middle of. There is a weekly key reversal there, which driven yields higher. This is the price action associated with that. Note the rally to higher prices failed at the breakdown level of this Head and Shoulders top, continuation pattern, I beg your pardon. And this, so once again, like the German, is vulnerable. But because it's in the middle of a wide trading range, it doesn't quite have the drama of the UK and European bond markets, which are bearish in all time frames, whereas this is only bearish in the short-term time frame. Oil, well, it's in a wide trading range, we know. Were it to break 105 on a close, that would suggest very much higher. There is a triangle here, slightly tentative, not at all compelling insofar as it's gone on for too long, but that shows the breakout of a possible triangle there. Let's leave it like that. Here's the bounce, not unlike stock. Oh, sorry, this is gold. Sorry, that was oil then. So it's marginally bullish, but it lacks clarity, obviously. Gold, the pullback to the prior high once, twice suggested very good support at 43.98 and scope for a bounce. There is the possible bounce. Stand back, we suggested, great uncertainty. Thanks very much. And finally, if you'd like to get the detailed analysis accompanying this video, which is only a summary, so that you have all the critical levels for the week to follow, may I suggest you take out a paid subscription using the links below. Thanks very much.